Good afternoon and welcome to February 2025 Director's Cut. Thank you for tuning in. We have Director of Mineral Resources, Nathan Anderson.
Good afternoon and welcome to the February 2025 Director's Cut. And thank you to everyone for joining us both online and in person. I'd like to start by thanking the team at the DMR for their continued focus during this busy time while we are in legislative session here in North Dakota. The team that churns out reports, applications, hearings, orders, publications, and data, and all the necessary work that goes into the day-to-day processes does this each month without delay, and they deserve a shout out for their work. The field teams in Minot, Williston, Dickinson continue, in spite of the extreme temperatures and conditions, to work safely and without delay. Our team in the Core Library in Grand Forks and the team at the Heritage Center here in Bismarck provide valuable information and a great service to many. Thank you to the team for all the great work. With that, I'll dig into the data. I'll note that the February Director's Cut covers production numbers from December of 2024. Starting with oil production, the month of December, the state produced 36,926,000 barrels, or average 1.19 million barrels per day, similar to what we were expecting going into 2025. Just as a reminder, the month of November was 36,759,000 barrels a day at 1.225 million barrels per day. Both of those numbers are well above revenue forecast. The December number was 8% above the revenue forecast of 1.1 million barrels per day. Moving on to crude oil pricing, WTI for the month of December has been right at $70, and the North Dakota market was at $62.69. Today's number was just right in that same range, right at $70, and the revenue forecast for the year is at $70. So we are low to revenue forecast and oil price, but well over on the volumes. Moving on to gas production, December's gas numbers was for the month was 104.6 BCF, or a daily average of 3.4 BCF. November finals were similar at 104.1 BCF for the month and 3.47 BCF for the daily average. Wells permitted in the state has been positive. For the month of November, there was 78. In December, there were 87 and 102 in January. And I kind of attribute that to January being a full month with no holidays. So a good increase in permits over the last few months. Moving over to the rig count, today there's 33 rigs in the state. In December, there was 36, and in January, 33. So a consistent month over month, also down slightly from 2024, but not surprising with the number of mergers that occurred recently. We have reports that certain operators have dropped a rig or two, and other operators have picked up a rig. But the net effect is that the rig count is down just slightly in the state. Other relevant rig counts, the United States rig count stands at 586. Roughly 50% of those are in Texas or in the Permian Basin, Texas having 278 rigs. You can see the other numbers: New Mexico at 106, Oklahoma at 43, and Wyoming at 20. From a basin perspective, the Permian, the New Mexico, and the Texas side of the Permian has 304 rigs running. The Eagle Ford in South Texas has 43. The Williston Basin, according to the Baker Hughes report, has 37. And the Marcellus and Utica dry gas combination has 34 rigs running. Wells waiting on completion went down slightly from November to December. December's number was 288. The inactive wells in the state is also down. It's highly variable, but it's down in a positive direction at 1,643. The completed wells is down for the month of January from 89 in December to 78 preliminarily in January, and that also is consistent with the frac crew count going down slightly at 12. And that is, like I mentioned, down slightly, and we attribute that to winter activities and potential impacts from mergers. The well count in the state continues to go up. The total well count is 19,286. Touching a little bit on the IIJA grant information, the total wells P&A'd was 73, and the sites reclaimed was 111. There's a minor amount of dollars left in this when the federal government recently had a pause On the formula grant side, the update is similar. There's been a no spending stop, and that's where we're at to date with that. The Department of Mineral Resources hasn't started any spending on the formula grant, so no impact for us at this time. Fort Berthold reservation activity, oil production stands at 160,275 barrels per day. Number of drilling rigs is at 2. There's 2,957 active wells, 1 waiting on completion, and 128 drilling permits in the queue. From a seismic standpoint, there's 3 active crews. I know at least a couple of them are up north between Bismarck and the lake. The statewide gas flared volume from November to December increased slightly, 31,000 MCF a day, or 0.19 BCF per day for the month. It's really normal month-over-month fluctuations that we're seeing there. The statewide number is at 94%, statewide Bakken at 95, FBIR Bakken is strong at 96, and with that, I think we're seeing a steady rig count and a steady completion activity in 2025, which was expected after the slight reduction in activity from 24 going into 25. Similar to the rig and completion crew counts, production has remained steady month over month, and we expect that to be the case for the majority of 2025. We continue to expect pricing to be steady for the near term. As I've spoke about during the last couple of sessions, there's been a trend to longer horizontal laterals. We continue to see more and more 3 to 4 mile lateral lengths. We're still assembling data around this, as it may indicate that operators in the state are completing more lateral footage year over year. I expect this data to be available in the coming months. In closing, I recently had the opportunity to travel from Bismarck to Minot, Williston, Watford City, and then down to Dickinson. And one thing that I consistently noticed was the benefit of modern horizontal drilling technology and the consolidation of multiple wells on single pads, and how these practices have really cut down on unnecessary surface use. North Dakota is fortunate in this regard, and it was nice to see that benefit during my recent travels. Before I turn it over to Justin, I'll address a couple questions that came in from online. The first question was related to recent state lease sale. North Dakota Trust Land administers this, so just to get that out there. The statement in question was the sale netted around $13.5 million, which is more than that in August of 2024. There's quite a few leases offered in Golden Valley County where there's not been a whole lot of production. The leases in Tuesday's sale weren't that high, and a lot of them went for $2 or $3 an acre. Would you characterize the sale as a good sale in terms of bonus dollars, and would you characterize that county, Golden Valley, as Tier 2 or Tier 3 acreage? I guess my answer to that is the price per acre is a very relative question, and that's that low dollar amount price doesn't indicate Bakken to me. My guess would be something, some other formation is being considered in the area. As far as Bakken acreage in the area, this is not core Bakken acreage, and would be Tier 3 if it was Bakken only, as it pinches out in the north half of Golden Valley County. There is some Three Forks present as well, but very little. Historically, this has been a Red River Formation play, and that's been the main formation that's been developed in the area. I had some time to check on some information from the team at the State Trust Lands related to the sale. I think there was 140 parcels that were offered for sale. 136 of those received bids. Total number of acres was 12,793, coming from 39 different bidders. And the high bid price per acre was a little over 30,000, and like the question indicated, 13.7 million in total receipts from that sale. So that's my short answer to that question. And then the other question that came in was, can you shed some more light on House Bill 1483? Can it also include Tier 2 or Tier 3 locations within the Bakken Formation that have not been targeted much by producers yet? And so, if I remember right, House Bill 1483 is a reduced tax rate in order to help promote drilling outside of the Bakken Three Forks unit, and specifically all non-Bakken formations. And I think it is related to everything non-Bakken. So any new well drilled and completed outside of the Bakken would be able to have take advantage of the reduced tax rate. I think the bill also removes the 10-mile radius around existing fields, so that does take into account Tier 2 and Tier 3 locations, although I believe much of the state has been unitized in the Bakken Three Forks. That it increases the ability or the amount of barrels that are available for that tax incentive from 75,000 to 90,000. And if there's been changes to that bill in the last week, I'm not aware of those. But that's my short answer for that question. So that concludes my report, and I'll turn it over to Justin if there's no other questions.
There's two more questions here. How much oil production and gas production is currently offline due to cold weather? And then which operators have shut in production?
I think Justin can touch more on that. He's been following that over the last few days. There has been an impact, I think, in the 40 to 70,000 barrel a day range. Justin could correct me if I'm wrong when he gets up here, but and I don't have specifics on the operators that have been shutting in production, or production's been shut in on due to the temperatures.
And there's one more. Do you expect mergers to continue pressuring frac crew count?
Yeah, there's really just one big merger that's still hanging out there in the state that could potentially take place, and that's the Chevron Hess merger. And I would say typically when mergers occur, there's capital efficiencies that generally are thought to occur, and then the Bakken barrel competes with a barrel across the globe when it's a big company like Chevron or Exxon or other large companies like that. So the impact of mergers may be kind of where it's at right now. We've taken a reduction from 24 into 25, and we'll just see what happens with the one big remaining merger that's out there. But I expect activity to be consistent where it is right now, both the drilling side, the completion crews, and the production side for the remainder of 2025. All right, thanks. I'll turn it over to Justin.
We now have Director of Pipeline Authority, Justin Kringstad.
Thank you, Bridget. Good afternoon, everyone. Justin Kringstad, Director of the North Dakota Pipeline Authority. We'll get some slides queued up here, and then we'll get rolling. So while the slides are coming up, the question on the production, kind of the latest, right around 5% is the best intel that I have, and no company specific details like that, but just generally with the cold snap that we've been having. I suspect that once temperatures start to warm up, which is now looking like probably later next week, typically takes about a week before some of those volumes start to return. So we're in definitely a kind of a prolonged cold period, not too extreme, but there are some minor impacts which are typical in this winter conditions like this. So on the production side, delays, but we don't have any updated information from Eastern Montana, South Dakota from last month. One active rig still working the eastern part of Montana, South Dakota with 0 active drilling rigs. So as soon as we get some updated production, we'll keep that table filled out. You heard from Nathan on the oil and gas impacts from November to December, about a 3x impact on the natural gas production going down relative to the crude oil. Flat GOR still hovering at 2.83 million cubic feet or MCF per barrel of oil. Trend is still continued to expect it to be going upward. Some minor shifts in the movement of barrels from November to December. Probably a little bit easier to see on slide 5. Again, we saw a little bit further nudge towards the pipeline routes out of the Williston Basin, slight downward tick in the crude by rail movements out of the basin. Still hovering, just for a rough rule of thumb, around 2 trains per day loaded and leaving the Williston Basin, headed, as you'll see here in a moment on slide 7, almost exclusively the estimates from the EIA were those were going to the Pacific Northwest. Again, I do not have any intelligence that's telling me that we have any barrels currently going to the California markets, and so it's specifically that Pacific Northwest and the appetite they have there for those Bakken barrels. Pricing, no major shifts. Pad 1, Pad 5 continuing to dominate as far as the pricing goes. Again, those are two markets that can only be reached from North Dakota by rail. Again, there are attractive economics for those that electively decide to use that route. Again, we've got adequate pipeline capacity today if everything wanted to move on pipe. So the reason we're seeing these 2 trains a day leaving, it's selective marketing decisions, and really that demand and that draw from those refining centers for that Bakken barrel. We look at pricing around the U.S. as of today, or as of this afternoon, $75 give or take on the Brent side, 71 on the Cushing WTI. Still a sub $5 spread between those, so I don't anticipate a real strong surge anytime soon on any elective movements of crude by rail. We'll certainly be watching the tariffs, and if there are impacts to that and decisions refineries may be making around the U.S. and or Canada. It'll be interesting if those go into place. I suspect we start to see some shifts in the way that barrels get marketed. But until that happens and we have a little more certainty of how the market's going to react, we'll wait for the data to roll in on that. Bounce ahead to slide 11. No major changes, still kind of within the bands of normal. Those truck import exports, again, this is December data. And then moving into the natural gas world, 1% increase for non-confidential Bakken production. That increase in flaring month over month came from locations that had pipeline connectivity associated with them. Again, well within the bounds, as you'll see on slide 13, of kind of that normal trend we've been seeing, somewhere in that 4 to 6% range, and primarily the stickiness being on that flaring from locations that have pipe connectivity. It's just the challenges associated with having adequate capacity all the way from the wellhead to the processing facility on any given day across the state. Slide 14, no major issues here as far as the number of wells getting connected to gas gathering. I'm not seeing a big disconnect there, which is encouraging. I added one graphic here on slide 15. I think last month there were some questions. You'll see in the left-hand portion of this, that's the EIA's February oil price outlook, very consistent with what they had in January. Still seeing that downward pressure, and some of the logic behind it now included on the right-hand side of this graphic is their outlook regarding world production, world consumption. And you'll see as they move into Q2 of 2025, they're expecting the imbalance shifting towards stock builds globally. A little bit of imbalance there with higher production relative to consumption, which is going to put downward pressure in their view on prices. So just to include that, because I know some questions had come up in the past. On the gas processing, no additional plants to discuss at this time. There was a little bit more color recently from Hess on their Kappa gas plant. That's the green system you see there. That would be coming on in 2027, 125 million a day plant just south of that Tioga area. So all things are moving forward as planned with that facility. So no major changes to this graphic. There are a couple things to discuss on the residue pipeline infrastructure. We're continuing to see kind of a bit of a trend where we're seeing more ethane getting pulled out of our residue stream. So kind of a winter time, as well as some NGL marketing decisions. Seeing a little less pressure as of late on the market share dynamics between U.S. and Canadian volumes on the Northern Border Pipeline. You'll see on slide 20, that is the BTU numbers as it exits the Williston Basin. So we are seeing a bit of a drier stream, which means there's more residue capacity available in that. And so we're seeing that getting picked up now with kind of stagnant North Dakota volumes. We're seeing that backfilled by higher Canadian volumes coming down to keep that system full on its way down into the U.S. We talked about the WBI project last month. I will note now, as of earlier this month on February 3rd, another project by Intensity Infrastructure Partners was announced. They launched a non-binding open season as well. Very similar Western type of market that's being targeted with this. You can see the information laid out here. The original scope on this project is slightly larger, 42-inch pipe, and then scoped, at least for the open season, at 1.5 BCF a day, give or take. with a slightly more aggressive in-service time frame. So in my conversations, it's likely that this project, if it was to move forward, would fall under the North Dakota PSC versus a FERC from a siting perspective. So that's the difference in the timelines. So a system that's not connected to an interstate pipeline system wholly within North Dakota would typically fall then to the North Dakota Public Service Commission versus interstate pipeline systems, which have to go through the FERC siting process, which historically have had a longer time frame. So you can see again, if someone has the slide deck, they can flip between them, kind of compare the two various projects. I think just on the surface, it's encouraging to see that clearly there's a demand for new natural gas service to feed some large industrial opportunities in the state. And so having two projects competing with each other, I think that should be very telling about the opportunities I think that are lining up within the state itself for natural gas consumption. So we'll keep a close eye, obviously, on both of these projects. I don't have anything really to reveal on either one of them today. But just so that everyone's aware of the two projects that are continuing to be active in business development here in the state. So with that, I will be glad to answer any questions. Looked like there was one question that came in before the event here, talking about the production cuts relative to weather. I think that was covered pretty well by Nathan and myself earlier, so nothing new to add there. Any other questions on your end, Bridget?
Yeah, it was just the previous question. How much oil production and gas production is currently offline due to cold weather? And then which operators have shut in production?
Yeah, so no operator specific details that I have. And again, right around 5%. So and that 50 to 80,000 barrel per day range, which again is a pretty typical for these, cold snaps we get.
That should be all. Thank you.
Okay, well, thank you very much.